Yes, my people, welcome back to Tanisha Trading Group. So, this is just the last bit of the entry confirmations, and we have to make sure that we are still following our structure, we're still following our SMAs, and we're still following the trend. So, we have our protected low, price should respect this low, continue to make higher highs and higher lows. And where are my areas of interest? So, if we look carefully, where's my last down up movement? This is my last down up movement. So, this is an area of supply and demand, aka SNDR. And without this SNDR, we would have never had this market structure break. So if there's an area of price we want to tap into, it's going to be this area where this will also be a imbalance. So we've got two for the price of one. And now if you're looking for potential entry, we've already discussed that where you can now look for potential flips. You can now use the mechanical SBS, aka golden SBS. And if we're using the golden SBS, price wicks the 618 very, very lovely, and we continue to push higher. So stops at the low and obviously take profit at my previous higher high. So that will be a 1.6R trade fixed, and there's nothing more I can do because this is actually the current charts. So if I just zoom back in time without having to try and do anything special, we have closed above this high, and this is a market structure break. Or I can even use this high, doesn't really matter. But I would use this high because the wicks are contained. So this is my MSB, and we are pretty much trading from this low. Within this MSB, where is my area of supply and demand? Well, technically it's going to be this area. And why? Because this is my last down up movement. So this is my area of supply and demand, aka SNDR. But I'll classify this as my to get move version, and we don't really have an SNDR in this situation here. And what we actually done was do what? So if we actually just go back in time, bearing in mind I am on the 5 minute chart, and if I go down to my one, where is my week low? This is my week low that I like for price to run. Everything's out of just the internal structure from this low and this high. So now when we're looking at price like that, what do we have? We have a pullback. But before that pullback, I can say that my 200 SMA and my 20 SMA is quite far from each other. So what do we say that is? That is a potential expanded reversal. So we can say that this is an expanded reversal because price is far away from my 200 SMA, my 20 SMA. So I would understand that price may want to pull back, tap into an area of interest, and then continue to make higher highs and higher lows. So on my lower time frame, it looks a little bit more clear where I draw out my pullback. So we have a high, and then we have a low. Price has tapped at least a 618, aka the 50%. So I'll just use the 50% so you guys don't get confused. So that's the first criteria. Within that first criteria now, I am now drawing up my Fib Geo, where I am drawing out a fib from this low to the high to this low. So what do? We tap the 100% level. So I now know that price is fairly bearish. So if that's the case, what can I now do? I can now enter off a trade based off this 50%. So I'll just raise up the vein. And if I want to be a little bit more acute, what can I do? I can wait for price to tap my 618. And then when we look at price, what happens? We continue, stops at the high, and then we can target our previous lower lows. But where is the area price may want to tap into? Maybe this area. So price may want to tap into here, then bounce higher, or even here, and then bounce higher. But this is all come from what? My 5 minute time frame. So when we let price play out, we fly with flying colors, and then before price starts to react, what's happened? Price has tapped into my unmitigated move origin. We've tapped it ever so slightly, but now we have a SBS where this is the tap back out, tap back into the zone, my new high. This is the 4, and potentially this is the 5. And then if I was to drop my fib from this low to this high, what do? We tap the 618, and then that could be entry confirmation that gives you the trade for this push higher. Stop on my predictor low. price should now continue to make higher highs and higher lows. So if that's something that you want to take based off the mechanical SPS, aka golden SPS, then you can take a trade from there. And then if you head over to our 1 minute, now we can be looking also for internal flips. So when we let price play out, internally, what have we done now? Internally, we had a low, a high, lower low, lower high, lower low, lower high. So now we ended up making a new higher high through internal structure. So now price wants to continue to make higher highs and higher lows. There could be a chance. When we let price play out, we don't take out those lows yet. So we don't take out those lows yet. We just come back to tap into it. But if I go back to my 1 minute time frame, this is a 1, this is a 2, this is a 3, this is a 4, this is potentially a 5. And what do we know this to be? We know this to be the SBS combo. And then how would I enter this trade? I'll enter base of a 618. So I'm gonna drop my fib from this low to that high. It looks like price was giving us a lot of drawdown, but these are the things that I'm going to have to accept when entering off the golden SBS. So now this will be my entry, then my stop will be at that low, and then I could target my previous high or the external highs. So now we have three type of entry confirmation that let us know that price wants to head higher. And you've been stopped out with one, still in the other one, you let price run, and then we take out our previous high. So this is where you're gonna have to understand and choose when to pick certain entry models for certain trades. But all of this will come within time and within understanding the strategy much better. Because you might prefer one than the other, you might prefer another one. You might prefer other entries than the three that I have now given to you guys. So all of this comes through the back testing. But for those of you that are probably answering like, what is the settings for the FibGeo? So if you go 1, 2, 3 down, we want to be selecting or clicking on the trend based fib extension. You want to star it. Once you click on that, if you just double click it, the original settings are like this, and you can see that it is quite terrible. So if anything, you now want to make sure we change the settings. So now what would you do? We would, let me just move that to the right. You can have the trend line, so you can mark it out. We pretty much want is a 618, the 0, the 1. I mean, you don't even need the 0 theoretically. So we'll take off the 0. Then you want the 1618, the 4232, the 618, and then you want, last but not least, the 6.860, and you also want, I think it is 200. So that will be 2.00. And then that's about it. And then if you want the background color to disappear, you'll turn that off. And then I like to make these all one color. It just makes the chart look a little bit more cleaner, a little bit more easier to see what price wants to do next. Oh, we already have our two marked out. So these are the levels that you need. And then that's about it, guys. There's not much to it. There's no extra work. And for values, I like to pick percentage. And as you guys already know, I prefer this to either be on the middle right and not the left, or middle center also works for me. And almost settings, and then you turn off prices, and then that's it, guys. This is my fib geo. So if you guys are asking like what is it, it is here. So if you want to pause the video right now and set it up, feel free. But this is my fib geo. For those who are probably asking where's the fib, is in the same location. So you have 1, 2, 3, and then when you go to the fib retracement, you want to star it, and then it's pretty much the same thing. So for the stoic fib, the classic fib, all it is just these areas, but I don't have the prices on there because I already know where they are within my price, and it's the same thing. Yeah, so you got the 1, the entry model, take profit 1, take profit 2. So within all of this, we have our take profit um areas. So in a situation, for instance, price took out, price tapped into here, take profit 1 will be there, take profit 2 will be there, and then all of this is take profit levels that you like for price to tap into, and then continue to make higher highs and potentially higher lows. So when we now head over to back to the charts, we've now taken out a previous higher high, and now this is now my new zone. I can wait for price to pull back. We pull back, but within this pullback, if you know how to catch the trade shorts, well, you already know what you got to do. If not, you understand on the higher time frame that these were wicks. So we got to make sure that our lower time frame is aligned with a higher time frame, and we're not just picking random areas where we now think price is going to react from. We want to make sure that we pick key areas. We want to make sure that we're picking good zones. We want to make sure that we're picking good highs, good lows, good key areas, good areas of support, good areas of resistance, good areas of supply and demand. Remember, price moves off imbalances, liquidity, and supply and demand. And those are our 3 areas of interest. So we therefore know for sure that at some point price will react, price will move either up, either down, or either we're gonna consolidate. So that's it in terms of the entry confirmations. Within the next phase, I will just be showing you guys much more examples within different market environments on how to pretty much take trades within our market structure, followed by our areas of interest, followed by our entry confirmation. And that's it for today's video. As I always say, victory belongs to the most tenacious. Wherever you know, I wish you guys a good morning, a good afternoon, a good evening, and a good night. And I'll see you guys in the next video. Peace and ciao.